following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
It is another excellent day here at the Power Trading Hour on a beautiful October 3rd. Of course, we've got a market that is rocking and rolling, been down hard. Now it's down, up, strong like bull. And the question is, which is it? What's the real direction? Is it one direction? Oh, boy. Those folks are going to be here tonight. And they're running around with cameras because all the squealy girls might do something stupid in Tampa. But other than that, we've got a market that is, like I said, a little bit of country, a little bit of rock and roll, and we're trying to find out which one. And I'm trying to figure out how to get this thing back up here. This thing, for some reason, oh, there it is, stuck down here. So we have to take a look at it. Not exactly sure why this thing is doing this, but she's acting weird on me today. I just had everything ready to go and it went away. Oh, there it is down there. It's hiding. It's one of those hiders. Okay, now that I've got it back up here on my screen, we're up 22.75 on the S&P cash, 2.15 billion shares, so a little less than the 2.4 billion we've had, or 2.5 billion since we started the show last couple of days, so a little lighter, not unexpected on Friday. Looks like they're going to make us wait until Monday to find out what's happened. Probably the biggest news is not the 22 points that were up on the S&P cash today. They were pushing this market since, of course, midday yesterday. The question is how this market going to react next week to the dollar index being up $1. You might as well just take 10-15 cents off of earnings on every S&P 500 company that exports because probably... I would say we're probably looking at 10% reduction. I think that would be kind of minor. So the question is, why would you be buying companies when you know that the next earnings are headed down? And the question is whether or not we can hold 1,700 on the Dow today, or 17,000, so they can claim that going into the weekend. Volume just a little shy. But again, it's Friday, so we'll have to see what happens on Monday. I don't think we're going to get a clear indication. And are they just running the easy shorts out of here that got short late in the day? Or is there really something else going on here that we should be aware of? But something doesn't add up. But I can tell you one thing that does. Gold down $22.50. And that's all about King Dollar. Playing King Kong on the yellow metal, the relic, 1192.60 on gold, and off 21 cents on silver, and platinum off $40, and it's ugly, folks. Ugly, ugly, ugly. We also have crude decidedly under $90 for West Texas. I've been looking for about 87. The action in the last couple of days suggests that maybe, just like the dollar index looks like it's going to race to 88. Looks like crude could race to 80, if you can believe that. And a lot of these metals, a lot of other things look like the dollar could just put a whopping on it. If you listen to me, I don't know, a week ago, 10 days ago, I question the ability for a lot of the gold miners to actually make it through this next cycle. There are going to be some big winners that if you can buy them at the bottom are going to be great. But what's going to happen is basically a lot of these gold miners are going to go out of business in the next 6 to 9 months. I don't think that they can make it much more than a quarter without going back to the well. The question is whether or not the investment community will throw more money at these guys to let them burn more money without a fairly quick idea of a response, i.e. them starting to make cash. The cost of production probably at the best now about $1,000 for some mines. All the easy gold kind of gone. It's pretty expensive to mine gold. So the question is, with a maybe $200 margin today for the lowest cost producers in the gold mines, is that enough to keep them in business and keep them alive? Just if you park the mine, you've got to keep pumping water out of it so it doesn't fill up. Of course, expensive even then to extract it. But it looks to me like, especially when you look at the JDST, that we're probably in the points where if these gold miners do not get cash and get it quick, they will not make it through the next 3 to 6 months. So if you're looking at these penny guys, I would look to and talk to Tom about how much cash they have left, because if they don't have a boatload, they ain't going to make it. Don't think so. Anyway, you can give me a call at 877-927-6648, 877-927-6648. I suspect we are at a market turn, and that turn, at least from what I'm looking at, is to the downside. I think this is the Tom McClellan, the father of the guy that runs the McClellan Oscillator Group now, doing a lot of that stuff. Always said that there was a little fish hook out there, and that fish hook was kind of the last opportunity to get out. I suspect from looking at the summation index, we'll try to get it here during the break. I had it up, but I'm just not exactly sure what's happening to everything out here in my browser windows. Maybe we'll be able to find it. Maybe I can just type it in here. See if we got it here. I remember I have to, unfortunately, I have to look for the symbol. I have it at home. Of course, a little tougher when I come into the office and use a machine that is not mine. What do we got? We got plenty of time here. Okay, NYSI. There we go. Okay, now page up. I got to get used to a new keyboard. I got to get used to a new setup, and got to get used to not being able to see. Okay, now here's the summation index chart, and even today won't be enough to get this thing to turn back up. Down at the very bottom, if you're watching, let me see out here. Let me see if I can zoom in here a little bit. If you're not familiar with the McClellan summation index, it is a oscillator of advancing and declining stocks. And what we've had here, at least today from what I can see, is the lion's share, and we're going to go through some of these stocks here through the rest of the day, but the lion's share of the bounce and the energy is coming into those Russell stocks that have just been hammered. We showed a great deal of them the last couple of days that have been hitting lows on lighter volume, but I don't see a lot of action in there. And we'll look at some of these and maybe we'll find some, but I was looking just before the show and didn't see a great deal. Anyway, the summation index doesn't have us back down to the lows, and even if the entire market was up today, I don't think we have enough to turn the summation index up. Maybe just some market gas out here. But like I said, I think we're going to have to wait till Monday. They're going to hold this thing up. What I did notice today was that as we went through about 1962, 1963, there were several hours when we had no volume and no buyers above that 1962. They pushed it up a couple of times. It's kind of come back and oscillated between this just under 1970 on the S&P cash down to that 1962 level on the S&P cash. But volume really was strong early in the morning as it got above that 1960 level. Every time the push comes with lighter volume. So the question is, I've kind of been half expecting this thing to have a 20-point downside correction and us close flat yet again today to drive everybody nuts, both the bulls and the bears. Although I think right now the bears would take a scratch day out here. Anyway, you can post a message in the den, or you can give me a call at 877-927-6648. But certainly, I don't see a great deal out here that would say that we've got one signal, yes or no, before the end of the day today. I suspect it will be on Monday. And frankly, I'm looking for a fairly quick run down to 1905. Maybe this is the B to C leg, and we are completing it. But it's hard for me to see the kind of volume, especially when we start looking at charts, which we might as well just start right now. There are a great deal of these stocks out here at lower levels. And American Realty Capital Properties, ARCP, is one of those. I think we showed this in the Path of Least Resistance newsletter the last couple of days. And a lot of them coming down here with light volume, and they are bouncing. What I dislike about it is the energy from these tops from around September 3rd down to these lows was not on lighter energy. We had a lot of energy, and guess what? Last couple of days, the volume just kind of dried up at the previous lows. But that means that you're going to have some pretty sophisticated and hard resistance just over these levels. And in this case, we got into the June 12th low of, what is that, $11.76 from June 12th on, what's that, October 2nd, with half the volume. So we should get a bounce, but we should have gotten a great bounce, and it should have come on volume. What we see today here is, 6 million shares. Not a rousing endorsement of these moves, and that's why I'm saying why there's a great deal of volume in the top-tier Dow and S&P stocks, probably the top 150 S&P stocks. The breadth remains weak across these markets. So just keep an eye on it. Burger King, another one. Of course, Buffett coming out and defending this yesterday. I'm suspecting with a 20-25 point move in the S&P cash today, we should be having some big moves in Burger King. Great deal. Buffett comes out and says everybody should pay their taxes except me and Burger King because I own a big hunk of Burger King. Well, guess what? This thing popped up on huge volume on the 25th on the talk of moving up to Canada and cutting off about 18% in what they are going to pay in taxes. Now, it's come down here. The first time you had an August 27th low at 29.50 with just 10 million shares. You got into it just a few days ago with 2.4 million shares. Now, on 2.4 million shares against 10 million shares against the gap up on 21 million shares, this thing should have gapped a buck and a half. I'm going to say that we can get a quarter out of this thing. Just kind of, we can go through these charts all hour long, and I think I will, to make my point, because it's not just me saying it. I see some weakness out there. In a lot of these, it should be bouncing, let me put it that way. Not just the usual suspects that are talked about every 5 minutes on CNBC. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Well, the volume has gone kind of quiet here in the first 20 minutes of this hour. 2.2 billion shares, so pretty quiet. So I guess we're going to have to see how the volume comes in at the end of the day. You'd like to see, 3.5, 3.8 billion shares on the New York Consolidated tape out here. And of course, when we look at the NASDAQ, rather muted, I suspect, because Apple just not doing a whole lot. Apple unchanged on the day, or up 2 cents. What do you have out here? Let's take a quick look at Apple and volume. 30 million shares, so not a lot happening. Anyway, we've been talking about these stocks all week long that should have bounced and haven't. We talked about the dog that didn't bark earlier in this week. Now, we're going to go back through some of these and see, now on the huge move, what did we get out of these things. The Carlyle Group, CG out here, going through its previous low of 2 million shares on May 7th. That spiked out here. Now, we spiked through it with about a little more than fourth the volume yesterday. And you have a pop-up, it's about $1. Any volume? And the answer is no. Take a look at CG out there and look at that May 7th to yesterday's low out here. We should be seeing some action out here. And the question is, I'm going to give it about 2 days. Like I say, I like to give these stocks about 2 days. And if the volume doesn't come back up and start seeing some action, I suspect that what we're looking at is some movement. What else do we have out here that I wanted to get into? EFA, the iShares Index. And let me read from what this thing says. Results of the index composed of large and mid-cap developed market equities, including U.S. and Canada. So this one kind of came down into it yesterday. You had about half the volume compared to the February 3rd low, 62.28. On February 3rd, 45 million shares. Got into it with 21 million shares. So you should have a big bounce and start seeing volume come in. Actually, we're not back up above the highs on that. Let's look at some other ones out here out of the ETF structure. Forum Energy Technologies, FET. And this is one that's down on and through a previous low on May 1st with 6.6 million shares, 600,000 shares yesterday, so 1/10 of volume. Okay, so all these stocks, I mean, these things should be ripping. I mean, not just kind of bouncing, but absolutely ripping your face off today. And certainly I'm not going to be shorting this one, but light volume, and it popped up a little bit, but kind of slowing down the other side of it. So we continue to see a great deal of these stocks. And like I said, the energy down on these last legs was not all vacant. Fortress Investments, FIG, another one of these that did a little turtling and prairie dogging. This case, the May 9th low, $6.58. And we went through that with 1.3 million shares compared to 2.6 yesterday. Now this a little bit better candle out here, but again, extremely light volume in a lot of these. And you would think if you were out wanting to buy stuff, you'd be buying some of these stocks that were on sale with light volume. But no, the market wants to buy the bluest of the blue chips, the names everybody's talking about. And those are pretty crowded trades, but certainly do move the indexes. And I think that's pretty much what we're looking at here now. 1970 on the S&P cash, and that puts us up, 24 points. And volume continues to be low, 2.26 billion shares. So, we'll keep an eye on it. Other stocks of interest, GDOR, Gulfport Energy. Of course, crude coming down hard today. And my guess is we're probably going to see, probably a little bit of buying of crude going into this weekend. But we are decidedly under $90. Probably going to bounce around between here, probably $90 and 87 now for a little while, and going to be it. Trading like crazy, swinging for the fence. Got to do it. Okay, Gulfport Energy. Anyway, you've been kind of watching this thing, and you had a January 10th low at $52.28 with 3.1 million shares. You had 3 million shares on August 1st, so you know this is going to get tested again. Okay, so yesterday we get it tested with 2 million shares, so 33% lighter. Not a lot of follow-through on that either today. So I'm looking at all these stocks at lows and seeing, as Tom says, when they squawk and talk, kind of murmuring a little bit today. So I am worried that this may be the false pop.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, it's been an extremely quiet last 30 minutes, 2.29 billion shares, 2.3. It just ticked over. So very, very quiet. It's going to be interesting to see how the end of the day comes, whether there are a lot of shorts yet to be squozen. But it looks to me like at least the volume is kind of tailed off on any short squeeze, at least on this. Nordic tankers, when we look at a lot of these out here that should be bouncing, we got kind of close. We haven't hit a bottom on this one yet, but I like this chart. If I was going to be long something, not yet, but boy, this thing, if it could come back and test this November 26, 2013 low at $7.59 with 1.9 million shares, this is exactly what you like to see. A nice high volume pop up and a huge long pull back, giving you a trading range of, what, about $5 on a $7.50 stock. I mean, doesn't get any better than that. But we haven't tested these lows. And two, I would have think if the market was really moving, that we would have seen higher prices in some of these tankers, and kind of a big yawn out here so far. Other stocks, a National Greece Bank out here. Now, Greece is wanting to exit the bailout from Europe early. But what do we have out here? I mean, it doesn't look. Some of these things don't look bad out here. Now the question is, what, if Draghi's going to let them out? But I think if you were watching the news, you may want to keep an eye on this NBG. This thing had a nice low out here at $2.90 on May 15th, 28 million shares. Of course, we're down here and went below it yesterday. Still closing above it, but no real volume or juice coming in on a day that we're up 25 points on the S&P cash. So what do we got going on here? Olin Corporation, the next stock out here, down at low volumes and not getting a lot of love. We had a little kind of a spike and a doji yesterday. Pretty good pattern. Says that you should be buying this out here if you are bullish on the long, or at least medium-term bullish on the markets. The February 5th low on this was 24.71. It went down to, what, 24.46 yesterday on 800,000 shares. So almost half the February 5th low on Olin Corporation. I used to buy a lot of their stuff when I reloaded my own shotgun shells when I was shooting competitively. ORI, Old Republic Corporation. And now this one's a little bit better bounce, but again, we're testing some of these lows on ridiculously light volume. These things should be rocketing out and picking up volume. And it doesn't look a whole lot like it so far. ORI, Old Republic International, the February 4th low out here at the low out here is showing up at February 4th, $14.20, and October 1st. Well, let's see what we can do about that. Oh, what happened? Something happened here to my notepad, didn't it? Why did it close? The machine's just acting weird today. Okay, so if we turn that off and turn that back on, and we come back to it, hopefully everything will be back to normal. So maybe he'll give me an okay in the engineering room if that's it. Thumbs up, thank you. Okay, so Old Republic International, 2.4 million shares. It's back up into the trading range, but you've got a nice jump, nice gap up, but 597,000 shares today. I would have liked to seen just a little bit more sign of life other than what looks to me like just some short covering down here. Now, again, most of these stocks, like I said, have come down on high volume into these lows. If you watch my show long enough, you'll know I talk about being congruent a lot, and that is I want to see the energy. If I'm thinking a stock is going to blow out its lows, I want to see the energy coming down to those lows increase and not decrease. If I'm trying to buy a low, I want to see that volume really decrease. And I created the Power Law Vector Indicator number disk so I could look at it and also get those numbers as an overall view of my market model. Now, I would have loved to seen Swift Energy out here test its previous low of 10 million shares from February 27th at $8.80. Last 2 days, what do we get? 2.8 million shares and just under a million today. So what else can we have? Well, I can't do anything about it. I don't know what else is wrong. But anyway, it is what it is. But let's see here. I mean, we got the notepad. I've got the charts over top of it. That's it. So as we look at these lows, February 27th, pretty interesting. You've got a low down to 840 yesterday, a pop-up. It's kind of come back down. Again, not a lot of volume. I guess it could be worse. It could be headed down. But again, I'm seeing a lot of these stocks coming back and testing some fairly significantly high volume moves and having little volume or dojis or no volume today in comparison. July 31st on Siliconware Industries, SPIL. What do we have on that? $6.64, 1.8 million shares. Got into it a couple of days ago with 1.2 million shares. Nice little doji pop up here today. Of course, nice respite from the down move. But you would have liked to have seen probably a sign of strength, which is a decent-sized candle with some decent volume. So what else do we have out here? Service Source International, SREV. That is testing the August 1st low of $3.16, coming into it with $3.06 from the October 1st low. So, we got a dime underneath it. We came back above it yesterday. Now, again, we didn't have a big move, but we had at least some decent volume in this one. Service Source International, SREV. So that may be one of the better ones out here. Let's take a look at SunCoke Energy. Now, I just can't imagine anything with coal doing well. But here's one that's not even bouncing out here. And if you're looking at light volume, it should. SXC. So what do we have? It is the 24th of June. This pops up fairly, July. Okay, so it's 24th of July. Pops up 1.1 million shares. That gap is now getting filled with 2 days ago 600,000 shares. Yesterday 338,000 shares, and today 197,000 shares. So light volume, but absolutely no bounce off of these. So you kind of have to take a look. Okay. Elections, yes. Elections coming up in Brazil. TIF, Tiffany and Company. Of course, everybody's saying that the high end is the strong end of the retail market. Would have liked to seen maybe some kind of juice in this thing today. TIF had a nice little bounce with volume that set up a big gap on May 21st. Basically 6 million shares that day. Tried to come back into it on August 13th with 2.7 million shares. Last few days on this thing, as it came back into it, 2 million shares. Yesterday, 1.4 million shares. Today, 600,000 shares. And of course, trying to bounce and not even getting a lot of volume. Again, with a huge market up, there's enough of these stocks that at support should be going higher and are not. We're going through these to prove my point that I'm not just whistling Dixie. Which reminds me of a great joke I cannot tell, but it ends up with whistling Winchester Cathedral, if anybody else has heard it. Anyway, Tasco Energy Navigation Limited, TNP. This thing has looked at a gap. That gap goes back to the 6th of January when this thing popped up. It's coming to this gap several times. Last time with some energy, so you know you're going to get a retest. That was on August 4th with 2.8 million shares. We went and spiked through it a little bit yesterday and closed back above it today. But again, just kind of a sideways day out here. So, yep, are the big stocks getting all the action and all the interest? Yes, but that's what is bothering me. I want to see a broad-based rally of these stocks, and that means a sign of strength on these stocks that have been down here at these lows with no volume. TPX, Tempur-Pedic, another one out here that should be rolling and rocking. It tested the August 1st low that had 1.5 million shares, and of course you had 630,000 shares yesterday, so a third of the volume. And of course, even if you go back to the day before, 883,000, still half the volume. Pop up today, 300,000 shares. Just so light as to make me wonder what's really going on out here in this market. I thought actually we'd probably go down 24 points by probably about 12:30. I thought this would just be one of these days where we went up, that was it, and everything came out. But going into a Friday, maybe a lot tougher to move this market down. But certainly look like they're going to try to hold this thing up into the close. 2.36 billion shares on the consolidated tape, though, tells me that this is going to be a very weak pop for a 24-point move in the S&P cash compared to the 3.8 and 4.2 billion share days that we've had lately. Time Warner, spawn of the devil, evil incarnate, ones that want to soil and defile my internet by becoming a conglomerate with Comcast. Now this one is another one out here. Now we should have seen some kind of movement out here also in Time Warner, TWX. Nice little August 7th low out here at $71.58, 19 million shares. We kind of poked through that yesterday, went below it. We've closed back above that, and you should be seeing a nice sign of strength today in this 3.7 million shares today. So down on 12 million yesterday, up on 4 million today. If the volume continues to hold this way, looks like it's going to be problematic. Of course, how do some of these refiners doing? Valero, you'd think that this thing should have popped right up if crack spreads were doing better. The February 6th low at 45.90 with 16 million shares. We're down a couple bucks below that, right? $1.50. And we can't even get a bounce on that on lighter volume. Yesterday, 9.6 million shares. And, if you compare that to 16 million shares or 15 million shares, we've had a lot of lows with that back in the February and February 26th and 24th time frames. So you've got some high volume lows out there. We're much lighter volume than that. If this market's going to run, don't you think we should see some bounces out here? Another one, WebMD. Again, I said this probably would be some of the weaker markets. Now, this is one that broke with higher volume, but going up against a gap. So you got kind of a couple of different streams coming into this out here. Okay, I'll get to that just in a second. You had a nice gap up with a huge volume of 3.8 million shares on April 14th in WebMD, WBMD, and come back into it back on May 15th, kind of tested that gap up, came back, and it's gone through it yesterday with 2.7 million shares, but we continue to close back below it, and it looks like we're going to close back below that April 11th low on WebMD. And again, I said looking like the challenge will be brought up as they come back. My guess is, of course, the first Tuesday in October is next Tuesday, and we're going to see what cases the Supreme Court takes. Almost definitely they're going to bring up the Unaffordable Care Act, the Orwellian named Affordable Care Act, and the question is what's going to happen with that. And we've seen a lot of these stocks that kind of ran on that look at it. I think that most people think that although it may be a hyper technical argument, it may be what the opponents are looking at to hammer that out. And of course, going to have elections soon. When we come back, we're going to look at STKL and wrap up the show. And I'll be here for the first 30 minutes of the next show, and then Tom O'Brien will be back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument.
By pulling live data from the Nadex exchange, the diagnostic box spread analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And I had a question in the den to take a look at Sun Optica. STKL. I wasn't real familiar with this. It's a kind of a granola-like company making organic foodstuffs, and certainly some big candles out here. Volume has picked up at least over the last few days on the downside. This thing gapped up, and what is that, May 14th, with some good volume to, let's call it 3 million shares. Got back into it a few days ago with 300,000 shares. Man, I like that. 1/10 the volume. Now, this is what a stock should do when you get tested with 1/10 the volume. And I probably would have been all over this even in a down market. This looks awful good out here, but you would have liked to have seen some volume come in here in the last 3 days to match this candle. And that volume right now is a little less than yesterday. is a little bit problematic. That may be all you got, but I tell you what, you're probably going to be in a little trading range down here that looks good, but I think you're all set up for a retest of the 1420, which is the July 1st high out here. So not a bad looking chart, and it's certainly a great test of the sign of strength that you had on that May 14th gap up. So kudos if someone is actually playing that stock. I don't know what they didn't want to... Okay, what else do we have going on out here? XPD, Express Expedited Solutions. Now this one is another one they had a nice little gap up on. That gap happened on September 12th with let's call it 4.5 million shares. Nice gap up. It's been kind of coming back in here. I've been talking about how you'd like to see about half these gaps filled. And, of course, you came back into this thing with 1.3 million shares compared to that day with 4.5 million shares. So pretty good support. Looks good. Now, here you get the gap up, but you don't get the sign of strength again. And, again, I'll say I'm going to give them 2 more days out here to take a look at this thing. But you would like to see a market that was gapping up on all sorts of these stocks that were giving signals saying, hey, keep an eye on it. ARMS Holdings, another one out here, of course, all about Apple. Kind of probably Apple not running a little bit, probably taking a little wind out of the sails of ARMS. Now, you had this giant gap, I'm not going to call it a gap, giant spike down from February 4th on ARMS Holdings, ARMH. You know, I've noticed that most of the fast buck crowd not talking about ARMS Holdings for a while now. But anyway, you had a big spike down from February 4th. 12 million shares, $40.90. Got into that candle on May 20th with 3.3. Got into that candle again on July 17th with 2.3. You did on that account actually have a nice gap up and volume, 4.8 million shares again on what is that, 722. So you are getting it. It kind of pulled back down here with lighter volume. It's gone back up. It filled the gap down out here from April 23rd. That gap down happened on 4.3 million shares. You tried it with 2.4 million shares on the September 2nd high. So this stock working pretty good out here. Anyway, I'll be back for the first 30 minutes of the next hour. And then Tom O'Brien will be back. He'll be talking and walking gold, I would imagine, and what he thinks of the movement. And then I'll be back at 4:20 to be talking technology. Got a lot of neat stuff going on. Going to be a action-packed. Be back in a minute.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.